Hi, my name is Brad Rosley. Thanks for tuning in again today for another episode of Smart Money. Today I'm very excited to talk about a topic that is near and dear to my heart and those of my clients as well, and that is tax strategies. I love talking about taxes. There's two things to think about when it comes to taxes. One is current tax rates and one is future tax rates. One we know and one is a mystery. With that in mind, when you are looking into doing different strategies for taxes, you have to ask yourself, what's the likelihood of tax rates staying where they are today, which is next to zero, but then what direction are they likely to go? The direction based on where they are right now in 2019 is they're going up. Not today or tomorrow, probably not before 2025 when the current Trump tax law expires, but at some point they're going up. Most likely they'll be going up to feed the needs for all the entitlement programs that we have with Social Security and Medicare. Before I go on, I want you to look into subscribing to my YouTube channel. I want you to also know that you can get more information about these and other topics at my blog page, which is bradrosley.com, BRADROSLEY.com, and my website, of course, fortunefinancialgroup.com. I am a certified financial planner, and talking to clients about tax strategies is something that is near and dear to my heart. Today I'm going to talk about 8 different strategies. I'm not going to go into a lot of detail on all of them, but they are all very valuable in minimizing or avoiding altogether income taxes. Let me start by bringing up one of my favorites that I've used. I've got 3 kids in college right now at the same time. I've got one at DePaul, one at Colorado State, and my middle one's at University of Minnesota. And the way I saved for their college predominantly was in the Bright Directions Illinois 529 College Savings Plan. Now, if you live in a different state, every state has their own plan and their own little rules that go with that. But one thing that's fantastic about these 529 plans is that once the money goes into the plan, as it's growing, it's not taxed again. That's huge. I haven't put away money in those kids' plans since they were first born. And I have quite a bit of money in those plans, as you might imagine. To have enough money to pay for those schools for 4 years, I've been saving a lot over many years. Fortunately, the growth in those funds, which has been fantastic, especially the last decade, as the stock market's been in a raging bull market, and the bond market too, for that matter, none of those gains I made in those portfolios were ever taxed. When the money comes out and it's used for college, post-high school related expenses for schooling, it's not taxed either. There's a whole list of those on the websites for you to go look at. You can look at brightdirections.com if you're in Illinois, or look at your own state site if you're coming from another state. One of the other benefits for the Illinois residents is that up to $20,000 a year of contribution is tax deductible on your Illinois state income tax, which is roughly 5%. So when I put $20,000 in, I get that as a write-off on my Illinois income tax return. $20,000 times 5% is $1,000 immediate tax savings. So I love the 529. Once I put the money in, I need money for college, I could pull it out of there. Whatever I don't use, there's all kinds of other benefits. You can change beneficiaries and change owners, and you can pass it down generationally, do all kinds of fun things with it. Next area I'm going to talk about is probably my favorite vehicle to have. I have a health savings account. It's better than a 401k plan. Yeah, you heard me. It's better than a 401k plan for retirement savings. I couple this with having a high deductible medical insurance plan, which saves me probably $800 a month, because my deductible, instead of having a low $500 deductible, I've got a $10,000 family deductible, so my premium is saved by $800 a month. I take that savings and I put it into a health savings account. Here's where the tax benefits start. Number one, that savings in the HSA, for me it's up to $7,000 a year, is tax deductible. Thank you very much. I can use a tax break. Number two, while it's inside the health savings account, making either interest or invested in a brokerage account, which mine is, I have both, the growth is not taxed. You're starting to see a theme here. And number 3, when it comes out for medical related expenses, it's not taxed then either. My plan is to keep saving in that account, pay for little medical bills out of my other pocket, out of my checking account or local savings account, and let that account grow. Maybe when I'm older, I'm going to want a fake knee, or maybe we'll have a cure for needing reading glasses or something, but it'll be expensive. I'll have the money set up in that account to pay for whatever it is I might need. If I don't get sick, I don't need it for anything, I could use it for things like Medicare premiums. So this is a fantastic place. Tax deductible going in, not taxed while it grows, and tax-free when it comes out. It's fantastic. The third area I'd like you to consider is, again, it's something else I use, a Roth 401k. The Roth 401k is an employer-sponsored plan where your employer, assuming they have a 401k, has to allow you as an employee to put your money in a Roth 401k. The downside of the Roth is you don't get an immediate income tax deduction. Well, I don't think we really need an immediate tax deduction at this income tax rates. I think there's a good chance, depending on your net worth and how much you save, and tax rates going up, that you may be in a higher tax rate going forward. Now, once you put the money inside the Roth 401k, it's not taxed anymore. All that growth is not taxed. When it comes out after age 59 and a half, it's not taxed then either. If and when you roll it into a Roth IRA, another benefit is there's no required minimum distribution like there is in a regular IRA. These are all reasons that I love the 401k. With all of these topics I'm discussing, I've either done other YouTube videos on my channel to give more information, or I've written a blog on it at bradrosley.com. So make sure you look into those, because I'm not giving you the full story here. I'm just hitting on some of the highlights. The next area is one that very few people know about or understand, and that's permanent life insurance. We have life insurance for our dependents if we're the breadwinner of the family and we need to replace our income should we die. For those of us who can afford it and they have a form of permanent life insurance, which means it's not going to go away after a few years, 5, 10, 15, 20 years, but it's made to be permanent, like for your lifetime, even if you live to age 100. Any cash value inside that policy is not taxed as it grows. Again, it can be invested in mutual fund type investments. When the money comes out of that, it can be pulled out as a return of capital, which is not taxed, or you could take a loan against it, which is not taxed, or if you never touch it, the death benefit in any life insurance policy passes on income tax free. So there's many benefits there as well. The next 3 I'm going to mention here rather quickly are a Roth IRA. If you qualify to make a Roth IRA contribution, it's a lot like the Roth 401k, except the fact that there's income limitations on it, who can put money in, and you don't need your employer to offer this to you. But if you qualify for a Roth IRA, the money you put in there, it's not tax deductible, but it grows tax-free and comes out tax-free. Love it. The next one I want to mention, number 7, municipal bonds. Municipal bonds are issued by municipalities, state and local governments. The interest on those bonds is federally income tax free. Something to consider. Then the 8th and final tax strategy, again, this one's a little bit more complicated, but I own several properties. It's been great for me, is commercial real estate. If you want to be a landlord, if you want to buy a house and rent it out to somebody, if you want to buy a multifamily property and rent it out, there's depreciation and other expenses you can use as significant write-offs to save money on your taxes. So I've given you today, in summary, 8 different ideas and strategies that you could use. Some or all of them are good for you. Some are much more complicated. Some are very simple. Some you have to qualify for. Some you don't. I've written about these on my blog at bradrosley.com. If you'd like to contact me and discuss how these work with you, feel free. You can look me up on my website, fortunefinancialgroup.com. I'd be happy to share those with you. Thanks so much for tuning in today. Look out for more videos in the future and make sure that you subscribe to my YouTube channel. Thanks a lot for listening. Have a great day.